There's a nice little boat, a little bit of trash in the water. And sometimes you might feel like you are a little boat on the water and the seas are getting rough. And there might be a market crash coming. Well, truth is, yes, there is a market crash coming. And then there's a market boom coming. So just realize that and use it to your advantage. You know, Cathie Wood and Michael Burry, a lot of people are predicting bad things, especially Cathie Wood mentioned China and how there's a basically huge problem with the real estate in China, real estate investment bubble popping, something like that, and which I wouldn't deny that's the case, and it might have effects so bad that it affects the United States. But even if it does, don't worry, unless you need your money right away. And if you're invested in the stock market, well, you can move your money. Like I said, if you need it right away, you can move it out, do it now while the market is still nice and high. Because on average, we have some kind of maybe a bear market, or you might say a crash, some kind of major decline in the stock market. I think it's about every 4.5 years. There's something which I believe it's 30% or more decline, which generally is going to affect almost all stocks. Each stock is represented, in a different way. So some stocks can go up during a so-called bear market, but if you have a crash, generally all stocks move down to a greater or less extent, and like if there's a rapid crash. But anyway, welcome to the Excellent Universe channel, and or welcome back, and please thumbs up, like the video, subscribe, and comment. And you can also see the other videos by clicking on the Excellent Universe words down below this video. And thank you very much. And it's very windy here. Hope you can hear okay. And once again, my nose is acting up. There must be pollen or some kind of something in the air. So excuse my nose. Hopefully it's not the pandemic in my nose, but I feel fine. I do have allergies, especially to mold. I think a lot of people would be allergic to mold. But anyway, if you haven't seen my other videos, I recommend you take a look at them, because even though I'm sort of maybe not the best looking and most handsome YouTuber out there, who knows, but my friends seem to like me, and I have a master's degree in education, so I'm generally highly educated, and I'm not 100% correct, but I like to think maybe 96% correct. And especially when I say, like, there's going to be a crash in the future and there's going to be a boom in the future, nearly 100% correct, unless something happens where we don't have stock markets at all anymore. Things will go up and down. So I guarantee that 99% chance of a crash. But you don't necessarily have a crash. You can have a slow decline. That would be called a bear market. And so what's the deal recently? This is the beginning of 2022. It's January. Maybe today's the 4th or the 5th or something like that. And it is Friday. And thank goodness it's Friday. You're going to have a weekend. And So let's talk more about the market conditions right now. And so I wanted to say something about possible crash and market trouble, but also in general about economics. And to understand economics and competition, you can think of it in a Darwinian way. Now, if you're familiar with Darwin, the idea is the survival of the fittest. And what it means is we have competition, many different people, and they are trying to survive by selling products, selling services, and products. It could be just commodities, silver, gold, whatever. But for the stock market, when people talk about a stock market crash, if it's the United States or whatever country it is, they usually mean the different stocks locally in their country. So I'm talking about the United States. And there are a few different stock markets here. And there are also over-the-counter stocks. For example, I can buy, or if you're in the United States, you can buy some stocks where the company is overseas. It's not even an American company, and it's not listed in the general stock exchange. One example is the BYD company in electric vehicles. And I'm mentioning that because they've done very well. And even though they're a Chinese company, hopefully they can clean up their environment over in China. I don't generally like to recommend Chinese companies because of the pollution over there, and the legal system is so very different, and in many ways doesn't protect the environment, which means people are suffering. But there again, we need greater education. So watching these videos and sharing these ideas hopefully will help you and help the situation. And that's the whole goal of the Excellent Universe channel, is to try to have a happy, healthy life. And the advice I give on here is basically telling people the easiest way to have the best situation. And so hope you see my other videos as well. So sunny here. I don't know if you can even see me. I'm just squinting. It's so sunny. But to get back to understanding economics through Darwinism, as I was saying, you have companies in competition, and including stocks. People are sort of betting on which company they believe is going to do really well. And when there's a lot of good news or a lot of hope, sort of approval for stocks about their plans, or even right now with electric vehicles, for example, people know that electric vehicles are the future. So instead of gasoline or petrol-powered trucks and cars and automobiles, we are moving over toward electric power, a little bit of hydrogen power, but mostly battery power. And so there will be huge sales because people are going to buy these cars and trucks. And so the companies that look like they're going to do well are predicted to have a lot more income in the future. That's called earnings. And so if the earnings seem to be increasing right now, and hopefully will continue to go up, then people are going to often buy the stocks of those companies that have, increased earnings. And they're saying, like, okay, here's what I think is going to be a winner. Not necessarily an absolute winner, but this one will succeed. It will hopefully go on. And sometimes they realize it's just a gamble and the company might go out of business. But if it has good technology, the technology can be bought out. So even a company that goes out of business or is close to, if they go bankrupt, you can lose all your money. And this is not financial advice, by the way. Not a advisor. This is for entertainment, informational purposes only. But so, as I said, even a company with good technology could go out of business because management doesn't make the proper decisions. They don't control their spending and increase their profits, so they could suffer, but they could be bought out, and so the technology could still be worth something. For example, Lucid, Lucid, Lucid Motors, they may never earn a decent profit. They might never make a profit at all. They could lose money, and eventually, since their technology is so amazing, they might be bought out, or better technology might come around, and so they could be losers, and so they would not be the fittest, and so they wouldn't survive. So the Darwinian system would say, like, okay, this company doesn't continue, and it sort of goes extinct. And so then their cars, nobody will be around to take care of them, take care of making a newer model. And even you might run into a situation where it's very difficult to get parts, and especially if there are any problems with software, which right now we're having trouble, I understand, with the software of the Lucid company. And so that's another electric vehicle company. It looks wonderful, but you don't know how it's doing. And you need to have many years of evidence to say, like, okay, well, they've been around, say, making good profits at least 7 years. That's sort of like, think of it like a child grew up, it's been healthy and strong for at least 7 years, and you think, okay, this one is going to survive. So if you're thinking about investing, actually the only mostly electric vehicle company I can think of that has been profitable for at least 7 years is the BYD company. As I said, that's a Chinese company, and their risks, people are talking about delisting, which means you won't be able to buy the stock potentially, or might be very difficult. But as I said, they're already not on the American stock markets anyway. They're over the counter. So that's sort of a questionable situation there. You have to think, are these over-the-counter stocks reputable, and is it a good idea? And be careful, maybe you should look into it and not invest so much money or any money in that kind of situation. So you have to be careful. But so now getting back to the Cathie Wood situation. Excuse me. So windy, I think dust is just blowing and causing me trouble. That's what I think is happening. I'm not sure. I think I might have dust in my nose. So if you're familiar with ARK funds, ARK, run by Cathie Wood, they've lost a lot of money and gone down in 2021, and they might even do worse. They are invested in Chinese companies, and they've been having a lot of trouble. And so what Cathie Wood said was something about they could have serious economic trouble because in China there's huge speculation basically people are buying housing in China as investment, and the housing they call it ghost cities in some cases. They have high rises like skyscrapers, giant apartment buildings, where people are not expected to live in there. They don't have plumbing, they don't have electricity, they don't have plumbing, well, that's sewage. Maybe you don't even have elevators, which for health, if they have stairs, maybe that's fine. But often people don't even live there, especially in the ghost cities. People don't live there, and they're just for investing and hoping that somebody else will buy it in the future. Which, if the population is constantly rising, and people are moving to an area, that doesn't seem unreasonable. But if you have a situation which we should have in the world, which is gradually reducing our population through China used to have a one-child policy. They've changed that. But if you have this situation where the population's going down and you have a lot of empty housing, then it could be a bad investment, and people would have trouble selling it. They might not make a profit, they might have to sell it at a loss, and then who would want to buy housing as an investment if they think they're going to lose money? So just like stocks, if there's some bad news and the stock market starts to go down, a lot of people say, oh, stocks seem like they were overvalued, at least right now. That's the case. So if the stocks are considered to be overvalued, or this housing is considered to be overvalued, which it is, and it's not even needed, then as the price starts to come down, a lot of smart people and other people just followers, they won't buy, and so you can have a huge crash. And that's a buying opportunity. So that's why I said, if there's a crash, wait until it comes down to what people think is below a reasonable value. I think Warren Buffett says maybe 15% below a book value, which is like maybe considered the true value of all the property and goods and patents and so on of a company. Or in property value, you could say like maybe the worth of actually, I don't know what the absolute true value of property would be, because it depends on location. So that's very hard. But if it comes down 90% from its highs, and so therefore it's well below other places, then maybe that would be good value. And so that might be a time to buy. So yes, people are going to lose money if they sell, but if they just hold on to it long enough, the prices could rise, and they may never lose money even if there's a crash. So stock market crashes, housing bubble crashes can be fine as long as people can hold on to the asset and never sell. Then they would never lose money. They could gain money in the long run whenever they do sell. And the value can fluctuate, but it's just it's a mathematical value. It's not an actual sale value. So don't worry so much about this, and just keep learning. If you're an investor and you want to have, say, a good retirement or do well, be cautious and take a look at, is a certain market overvalued, or is there a high risk? And in China, there may be political risk. If people are more educated and they have more competition in government, things could work out well, especially if China does manage to reduce its population and reduce its pollution. Things could be great, but they still have their one-party system. It could be considered communist or oligopoly system. That although you do have different regions in China that have some power, but it's all pretty much just one party, which is sort of a monopoly situation. And when you have monopoly and you don't have competition, then you don't have efficiency because people aren't competing to be the best. So, you could have a very bad situation, very similar to any kind of dictatorship or kingdom or what have you. You just have one ruler and they're never going to be thrown out, except for by terrible violent means, which I don't advocate that, but I do advocate competition and multi-party systems where people have a choice and they're going to choose what seems to be the best, along with education, and so people can make smarter decisions. To have that, you need better nutrition, which means you need more free land, which is another reason why we need to reduce populations gradually and peacefully through just not having so many children. Okay, so I know I covered a lot of topics and hope you can have questions and you can put them in the comments below. And please thumbs up and like and subscribe. Okay, take care now. And be very careful right now. Investing, as I said, look into, see if the markets are overvalued. Because right now, yes, the answer is yes, they are. But right now, January 2022, they could be at 250% of a reasonable value. And they could easily drop 90% with a big crash in the United States. Could be started by China or started somewhere else or here. Who knows? Just be cautious. I would have at least 30-40% cash, or an alternative to that could be short-term treasury bills, is what I've heard. But you got to look into that yourself. Do your own research. Don't just listen to some YouTuber. Okay? Thank you. Bye.